Welcome everyone. Welcome back for those who have been attending the pitch. This is a session we organize monthly basis with our Climate Tech Coalition. The Southeast Asia Climate Tech Coalition has been gathering members, investors, conglomerates, and climate tech founders for nearly 6 months now. We're gathering more than 500 members across several countries that are interested to shape and create the future of climate technology by investing in bankable founders. So we have more than 270 angel investors and VCs across not only Southeast Asia, but really the whole world that are in our coalition. Some of them are here today. Some of the others are in our Slack group. And we're trying to connect the dots, basically between great bankable founders that we came across and investors who are ready to walk the talk. No greenwashing, just hard tech, mainly B2B climate technology companies. So today it's an exciting one. We have some really interesting companies. We'll share them with you in a moment, but just to get started and waiting for everybody to be joining the call, I will share a little bit about what we're doing. So with Atlas Capital, we're one of the early climate tech VC, humble, small. We've been starting to invest in 2020. And we invested in 10 climate tech companies, 12 actually. We've finished our last 2 investments for first fund last month. And our thesis is very simple. We believe that we're going from 4 seasons to 2. We believe that it is too late to stop climate change. And we believe that this is the time for climate adaptation. So this is really much our mandate to support companies that are not just decarbonizing. Decarbonizing is great, but also helping cities and the built environment to adapt to a paradigm of a +2 degree world. You can see some of the members of our team here, but if you want to learn more, of course, you can go to our website and see our advisory board, including our scientific committee. So with this mandate, we specifically look at North American companies and European companies that have pilot already proven and some traction, mainly in the industrial hard tech field, B2B. And we look to connect them with some of the conglomerates we had the chance to connect with here in Southeast Asia to basically be able to come from the US or Europe and bring their technology through joint ventures and partnership here in the region, because this is a region that we believe, is actually really in need of climate technology innovations. Just to put some numbers into that last sentence, Southeast Asia marks up for more than 20% of the world biodiversity, 10% of the world population, but 1.6% of the total CO2 emission. In the meantime, we have a lot of deforestations happening here. We have 85% of the energy supply in Southeast Asia coming from non-renewable sources, and 60% increase of CO2 emission towards 2040 that are forecasted. So Southeast Asia have high potential for climate action. Tackling environmental issue will not only require money, but really transdisciplinary work across software, hardware, and we believe there's a whole economy to be built here. And we don't have the time to wait for local founders to start from scratch. We see great IPs, great patents, and great innovations in the US and Europe, and we think those could be deployed here in Southeast Asia faster through this kind of model. So the coalition, the Southeast Asia Climate Tech Coalition, have been gathering, as I mentioned, more than 500 members just in that Slack group. So it might be hard to connect with investors who understand not just crypto or fintech, and that's why we create this support system, or at least we're trying to. We believe it takes a village to create great companies. On my side, I had the chance to build, a tech company from scratch as a CEO and made an exit 3 years ago. and it took a village, but it was easy. It was software. So when we talk about climate technology, we talk mainly about hardware. It takes even more resources. And that's why we believe a coalition such as this one is useful. And everyone is welcome to join. We look forward to have more venture capitalists to join us. We look forward to have more conglomerates to join us. Every month, we are bringing different ones as judges, but also being active on our Slack group as well. We had PTT, SCG, for example, from Thailand. We had Vietnam Vin Group, for example. We had Hong Kong New World Group. Some of the largest billionaires are now interested in climate tech, and some of them are in our coalition. So looking forward to connect more of the dots here. We have events running every month, online and offline. We are now part of our monthly virtual climate tech presentation. We have one in November happening as well, and one in December. So for those who haven't got the chance to be accepted to pitch today, don't worry. You can get ready for the next month or the following one, and we'll have different type of judges every time. But those pitches are not wasted, because those will be recorded via video, so we can share that with our audience of investors, and hopefully some of them will be reaching out through the Slack group. As we have so many members, we start to create a member directory. So feel free to ask our team members to share with you this directory, so you can contact directly some of the members through Slack. And people might or might not be responsive, but with a little bit of help from our team, they will get connected with you. We also host monthly networking dinners for investors only. Usually we have one billionaire at each dinner that is hosting, and then we have other investors joining, and we usually invite 1 or 2 startups per dinner. The next one is in Hong Kong on the 8th of November, if I'm not wrong. Sorry, 9th of November, so in 2 weeks. And then we will have another one in Singapore in December as well. And lastly, because, to put all of this together, it's the more the merrier, we host a yearly flagship conference in New York City during the Climate Week. And this is really something I can recommend to anybody, because it's just amazing. The Climate Week in New York is probably the greatest climate tech event in the planet. I just came back from it 2-3 weeks ago. We were hosting this conference. You can see some of the pictures here. And we were just one of the conference among more than 600 other conferences in New York, all for climate, with more than 30,000 investors, founders, scientists, policymakers. So this is really something you don't want to miss if you are in the space. It's eye-opening. I will even say, to me, it gave me back faith into humanity to see so many people, young and old, to be gathering up to really give our generation and the next one a chance. So without further ado, let me introduce our amazing judges who were very, very busy managing millions and millions of dollars, and who took the time because they are curious and they want to help. So maybe we'll start with Peng then, because I can see that Peng is ready. So yeah, Peng, feel free to introduce yourself.
Sure. So hi, everyone. I'm Peng Sittakaradej from ADB Ventures. ADB Venture invests in early stage startups to drive climate impact in developing Asia. And when we say climate impact, we look at business model or solutions that have significant emission reduction or resilient impact onto climate vulnerable populations. And that could range from clean energy to sustainable supply chain to climate smart agri-tech to say parametric insurance. And when we say developing Asia, it doesn't mean that we can invest only in startups from Asia, but actually we means that we can invest in the company from anywhere in the world, but they must create climate impact in developing Asia, whether that is through that customer base or production base. And we have done so through 2 main vehicles of our fund. So the first one, we have seed fund for early stage, pre-seed or seed stage And then we have the main fund where we start investing in pre-Series A, Series A, and usually we'll also do follow-on investment in the subsequent rounds. And our thinking is really to leverage on our network to help grow our portfolio companies. And to date, we have roughly total 45 startups in our portfolio, and we're still looking to grow further. And thank you so much for having me today, and really looking forward to the pitching session.
It's an honor to have you, Pang. Thank you so much for joining. And yeah, there's a lot going on today, but also in the Slack group. So please, everybody, check out the fundraising channel, because you will be able to see not only the companies that have presented today, but also the other companies that presented on the other sessions, and they are sharing usually their presentation there. So there's a lot of really good deal flow happening, and this is being screened by our team of 4 analysts. And some of them are also being screened by our scientific committee. So there's a lot of good stuff in the fundraising channel. During today's session, we'll be really using that, because every company will be only pitching for 5 minutes. But of course, there's a lot of questions and there's a lot of follow-ups to be done. So fundraising, hashtag fundraising is the channel where you can take the discussion forward even after this call. All right, without further ado, I would like to introduce Ryan. Are you here, Ryan?
Yep. Can you guys hear me? Hello?
Yep.
Yeah, thanks guys for having me here. Super excited to be hearing the pitches later. Ryan, I'm part of the investment team here at AgFunder. So AgFunder, as our name suggests, we invest in food and agriculture startups. We invest early stage anywhere from pre-seed to Series A. Anywhere along the value chain, upstream, midstream, downstream are all kind of fair game for us. And as you would expect, in the realm of agri-food, there's a lot of intersections between climate, or at the end of the day, it does lead to quite a significant impact, given that we all eat food, and then it's quite a very close, plays a part in our everyday lives, essentially. AgFunder, we actually started with AgFunder News, which is our newsletter that has about close to 100,000 subscribers right now. We report, weekly newsletter. We send out weekly newsletters on anything and everything that's happening in this space. And right now we have 2 investment vehicles, one headquartered in the US and one in Singapore as well, investing into early stage agri-food tech companies. Right now we are seeing a lot of movement into this space as more and more people are looking towards decarbonizing our agri-food supply chain as a way to make impact in our world. So we are privileged to actually be one of the first few companies, first few venture capital firms to be operating into this space. My background is in environmental engineering, so I've always been passionate about the broader sustainability space. So I'm looking forward to hearing what the startups have in mind for us that are upcoming in a couple more minutes. If not, yeah, that's it. Thanks, John.
Wonderful. Thank you, Ryan, to join us. And yeah, indeed, this space is a very interesting space because we all eat food, and the global supply chain of food production has been challenged, not only with climate change, but also geopolitical shuffling. So indeed, a very interesting space. Thomas, I would like to introduce you. Thomas is one of our advisors in Atlas Capital, and he's got a great experience, not only as an angel investor, but also as a technical co-founder as well for a very interesting company. So Thomas, feel free to introduce yourself.
Yeah, hi everyone. Thanks a lot for having me today. My background is in energy, renewable energy. So I started my career in 2007 in the solar industry in Germany, and went through the rise and the fall of the German industry, which was a really great experience to see how it was like hyped up, and then the balloon popped, and then a long way into the mainstream. And on the way from solar, I moved to hydrogen, green hydrogen, renewable hydrogen, which has been a thing for the past 5 years or so. We were pretty much ahead of the curve in 2017 when the Thai startup Enapter was founded. I wasn't a co-founder, but one of the first hires, and then worked there as a CSO, Chief Strategy Officer. And yeah, we grew the company from a small startup to a stock market listed company with almost $500 million in market cap and 50 million in revenue last year, and hopefully much more to come for Enapter. personally, I'm taking a bit of a family break at the moment. The past 5 years were pretty exhausting, so I'm trying to see my kids for a bit. And met Djoann and really admire what he's doing with Atlas. And I think we have so much to achieve, and I think Atlas can play an important role. So happy to help out.
Thank you so much, Thomas. And then maybe Marty now, if you're ready to say hello.
Hi, can everybody hear me?
Yes.
Okay,
wonderful.
perfect. All right. So again, Marty from Golf Energy Development here in Bangkok. We are an energy developer that has branched into several other businesses, the digital business being one of them. So we need to be more looking into the renewable energy and to sustainability. And that's why we're pretty much here listening to see if there's any bright new ideas. Thank you.
Thank you so much, Marty. So Gulf Energy, for those who are not from Southeast Asia, is one of the largest energy player in the region. So Marty is very humble here, but check out Gulf on Bloomberg's and you will understand what he's talking about. So we have a great bunch of judges, and we also have a great bunch of really exciting startups here. So without further ado, let's get started. Maximilian, are you ready to start?
Absolutely, and it's good to see some familiar faces and some acquaintances. Just to let you know, Thomas, you don't know me yet, but I know Enapter. When we started our company 2 years ago, I found a very good document on the valuation from a company called Rödel & Partner, and I think before it went public, they did the evaluation. I thought, maybe I can learn from this PDF file how we can, create our company valuation. So Enapter is on our radar since a while. And Ryan Lee, yeah. And we need a lot of hydrogen, you will learn later on. And Ryan, please convey my best regards. Now, let me share my screen as usual. And I hope to be back in Bangkok very soon. I've been there this year in May for a business trip from the European Union. Been in Singapore now in September for the Lee Kui Wai Global Business Plan competition. So I agree with Djoann that Southeast Asia is very, very, very important, a very interesting and dynamic market. Now, our mission is fermenting renewable carbon for generational life quality. You will learn in a second what I mean with renewable carbon. And life quality is anything that we used to love. Flying with flights, using a lot of sustainable aviation fuel, having consumer goods based on plastics, having available creams and soaps. And there's so many products that are based on oil, and it's all about, that's why you see this orange bar below. Now, what's the problem? To reach Paris goals, or maybe even, as John put it, the 2 degrees limit, we need to phase out fossil fuel by 2050 completely. Now, this is possible as everyone is going with electric mobiles and by trains, but there is industries which will always need a carbon feedstock. You need carbon feedstock for plastic shoes, for clothes, for home care and laundry, for lubricants, for linen, for bottles, and yes, for sustainable aviation fuel. Now, our solution value proposition is that with precision fermentation, we turn renewable carbon into net zero carbon feedstock. We can use carbon dioxide as carbon source. We can use organic byproducts like an apple as carbon source. And our oil is branded climate oil because it has a net zero profile, really helping to decrease Scope 3 emission of our partners. This is the biggest value proposition. It really behaves like palm oil. Chemically seen, our oil is not like a crude oil, like fossil oil. It's more like a vegetable oil. There's a lot of carbon chains, C16 and 18, but with 0 kilogram CO2 footprint compared to 5, compared to 7 with fossil oil. Now, what is our secret ingredients and maybe the mean trick why we outcompete everyone else? Please don't understand this drawing from our patent on the left side. The big core message is we have a patented bioreactor which are equipped with world's fastest CO2 transforming bacteria. And on the right side, you see the benefit. Our process is 700% faster than any biotechnology transforming CO2 to oil. You see the bacteria Yindii. I don't need to put the name here, but this is the technology that Aquatech is turning CO to ethanol. We are 7 times better. How do we make money? There's 3 phases of making money. We have the contract research phase, we have the licensing phase, and we have the marketing phase. Who's our customers? Who is paying the party? The party could be paid by Mitral in Thailand. The party could be paid by Gulf in Thailand, by Sembcorp. Whoever has carbon dioxide or organic side streams for us We're happy to engage with you starting next year in research projects and joint research. You sell your biomaterial, you give us your CO2 samples, and we develop a biotech process to make money out of it. Once on the left side, once the contract research is a go, yes, we can make money out of it, then we are ready to go to the licensing phase. We will help you to build up the bioreactor and the whole production plants, which is your capex. It's not our business, it's your capex, but we are happy to license this technology, our patented technology, to you. Point two, we have a subscription model. In the years to come, we will update this genetic engineering our bacteria to become super bacteria and super bacteria. And the better the bacteria get, the better your internal rate of return or return on investment of your existing capex will be. For example, because we create higher value products, or we create the same product but faster and more cost efficient. Once we reach this stage of production, so we have biomaterials like oils, or we have bioplastics, or we have vegan proteins, we can do everything. Then we go on the right side of marketing. For example, if you're a company like SCG, or if you're a company like Banpu, maybe selling oil is not your business. We do have business with the cosmetics industry. And please watch my camera. As we speak, I'm here on a cosmetics conference, and this is what we mean with marketing services. Our sales team and our contracting team will sell the oil to the highest bidding party, maximizing the return on invest for our partners. So this is how the money goes. And on the last row, you see from one-time revenues, we go to recurring licensing revenues. And by 2033, almost 100% of our money will be recurring revenues. And our team will not grow in size, maybe it's kept by 300 FTEs, because then we have enough patents, we have invested enough in science, and really can just leverage our knowledge by licensing to more and more renewable carbon sources. We tap $1 trillion market. As you can imagine, when fossil oil is phased out by 2050, and there's a whole cosmetics, home care, laundry, sustainable aviation flight, and plastics industry left with a big gap of carbon feedstock, this is where we go in. But we start small and humble with facial oil and hair oil, very small volumes, selling 30 milliliters for $40. This is exactly what we need. High value entry market cosmetics. Now, what's with our competitors? Yes, there is startups out there that can take sugarcane or sawdust or any byproducts or other sugar sources and turn them to bioethanol or oil or vegan proteins. But trust me, I did the research. There's not enough biodegradable side products on Earth. Yes, we have some leaves. Yes, we have some old bread, some spoiled rice, but it's not enough to produce 450 billion tons of sustainable aviation fuel, of 500 million tons of crude oil for the plastics industry. But we can, because carbon dioxide is an abundant resource. There's enough. In the early days, our partners will be CO2 sources like the fossil oil industry or the energy industry. In 20 to 30 years from now, our partners will be direct air capture companies. So we're a team of 8, 7 people are scientists. 3 of them you can see here have a PhD, and I do have a master's in management and also a biotech background. So we are a complementary team, but we have also great advisors from Biostop, from Total, for example. So we understand the cosmetics and the fuel market better. We have research contracts and partnerships with one of the best European research associations like Max Planck or Helmholtz Association. We right now raised 1.6 million, and only 300,000 are left to be open. So please, ADB Venture and the others, get in touch with us. We are about to close the round in December. We almost got the 1.6, only 300,000 are missing. So let us close the carbon cycle together. Thank you very much.
Great pitch, and I'm glad that you came back, because this is a much better pitch than the first time. Congratulations, Maximilian. And hope you will be as well soon. All right, judges, this is the time for Q&A.
If I may, I'd love to hear you grace very briefly only on the technology. So can you just in a few words say how does it work, and focus on the CO2, because I get the pitch that there's not enough byproducts from which you can do other stuff. So obviously it's very convincing to start with the CO2. So what form of CO2 are you using, and like in very simple words, so what is the process?
Yeah. So wait a second for reading afterwards for the starting the tech DD. I shared our patent now in the comments. And in very few words, it's bacteria that were found in Japan in volcano sources. And those bacteria can turn CO2, hydrogen gas, that's why we need your hydrogen, and oxygen to biomaterials. But hydrogen and oxygen gas mixture can be an explosive gas. So our patent is around machines and bioreactors that separate those gases. So we have one reactor for hydrogen and one for oxygen. Long story short, it's safe and very rapid because those are the fastest bacteria on Earth, much faster than algae or any other else transforming CO2.
So CO2 would be captured from the air predominantly.
CO2 will capture for the next 20 years from partners like Bamboo or maybe Sempcorp from waste combustion plants, from cement industry, from the chemical industry, from the fossil oil industry. And once the cost for direct air capture decreased, then those direct air capture companies will be our natural source of CO2.
Quick question. I think at the beginning of your business model, you said your initial revenues will come with the kind of contracting research or like the one-time fee that you're paying per client. What's kind of like the development time cycle that you have for each of these clients at the beginning?
So this year so our business model is already proven. We make 300,000 in revenue, and one partner from the oil and gas industry from Europe, they paid us 130,000 euro for a 3 months project. So it takes 3 months. So they sent us some, bottles with their byproducts, and we put the byproducts to our bioreactors and see how it goes. And then we gave them a report and a techno-economic analysis and a life cycle analysis. So I guess 3 months for each client. And now they're really thinking of building the bioreactor, like going the next step, because the business case looks promising, and now we're in the next phase.
Gotcha. And you mentioned the microbe is not something that's proprietary, right? You found it in some Japanese hot spring, I think you mentioned.
Yeah, so the bioreactors are proprietary, and the microbes will be proprietary next year. So as we speak, we're now hiring a metabolic and genetic engineer to make a standard bug turning to become a superbug, and then we will patent the superbug.
Gotcha.
So there's two families. It's a hardware made in Germany engineering patent family and the microbiology family. So this is the two, really the IP streams that we have. And by the way, the genetic engineering part is paid by one of the largest cosmetics companies in the world. It's a deal worth 500,000 euros. They pay us the two engineers, so we kind of try to bootstrap. And the patent will be ours, but they will have an offtake agreement to be the first one benefiting from the CO2 to oil conversion. So just to indicate how big the interest is of this technology.
Where's the company incorporated? How much staff are you currently?
Yeah, we're 8 people based in Hamburg, growing to 12 to 13 people now with the support of the investors.
I have one question. How would you compare the cost of service from your business versus like the other alternative options that your potential clients may have to manage all of this, like CO2?
So it's always about money and cost, and we have two things to create a good business model. First of all, we market the oil as high value as possible. So we become a cosmetics brand. That's why we are here, this cosmetic fair trade. And on the energy side, you saw this curve that we are 700 times faster than other bacteria. Faster means we need smaller bioreactors. We need less time. So it will be cheaper. It's too early to tell you if it's 7 times cheaper. I doubt it. But some factors cheaper. The only competition that we now have to keep in mind is Fischer-Tropsch. Like there's big chemical companies from South Africa like Zalzol. So we are aware of the purely chemical processes, but they're not sustainable because they use syngas, carbon monoxide, for example, or gray hydrogen. And they need carbon monoxide, so they cannot use CO2 directly. They have to transform CO2 to CO1, which is energy costly. And Fischer-Tropsch runs at 700 degrees Celsius or even more. It really needs a lot of energy to heat it up. And our process runs at, well, we don't need energy. We need to cool the process because the bacteria, they they produce energy.
Okay, perfect. Thumbs up for the question, 5 minutes. Perfect. So John, carry on.
Thank you so much, Max. And again, for you judges and anyone in the room, I know we have a lot of angel investors and a few other couple of funds watching now. Even though you are not a judge, they are interested to connect with you. So please use the Slack channel fundraising to ask more questions to Maximilian and the other startups that are going to present soon.
I'm going to post this deck now, and then please don't. I mean, it's not rude, but I have to leave. We win an award today, and so we have an award ceremony here.
Congratulations, Max. See you.
Thanks.
See you on Slack. All right. And next, I think we have Philip from New York. Are you here?
Let me see. Turn my microphone on. Can you hear me?
Yes.
Hi, Jean-Paul.
Welcome.
I'm actually in California, so
California.
but that's okay. Good afternoon,
Thank you for waking
everyone.
up for us.
Yeah, no problem.
All right. Whenever you're ready.
Sure. Let me screen share.
Yep.
Okay. I'm just looking at my PowerPoint here. Can everybody see this? Because I can't see.
Yes, we can.
Okay. Okay. All right, great. Good afternoon, everybody. So my name is Philip Kopp, and I'm a serial founder. I've founded more than 5 startups, and I have the pleasure of working on Dcarbon solutions and introducing Dcarbon to all of you today. Dcarbon is the culmination of my life's work and passion over 25 years in developing and creating tech solutions and companies. And really what Dcarbon is, our vision is to bring all people and all businesses globally into the net zero climate transition economy. And over the next 20 or 30 years, we have a lot of work to do. Literally hundreds of trillions of dollars that need to be deployed in order to transition away from fossil fuels into a net zero economy, and our what we build is a platform to enable that. And really, what we're focused on is looking at sort of actually how to bring people and businesses into the financial aspect of this transition. And today, that's organized really as a carbon market. And the carbon market is designed as a tool to enable large emitters of carbon and industrial emitters to sort of finance and invest in projects that can help reduce CO2 on Earth. But these markets today really are quite immature and very fragmented. They're operated regionally. And unfortunately, they have a lot of what are considered to be junk products. So there are many carbon products that just simply don't represent the removal of carbon from Earth. And because of that, it makes it very complicated for buyers, being either regulated energy companies or for even unregulated voluntary ESG buyers that want to invest in climate neutrality. It makes it very difficult for them to invest in high quality projects or products that are actually removing CO2 from the atmosphere. And so we've approached that problem really from a technology perspective, using advanced technologies like IoT, artificial intelligence, and blockchain to actually base carbon removal on data and measured instrumentation. And so what our platform does end to end is it uses cellular IoT sensors to measure energy production and consumption at the source. So think of a solar panel or an electrical panel on a commercial building or a residential building. We measure the energy consumption, and then in our back end, convert that using information from grid operators and generators to be able to match that energy against the carbon that currently exists in the grid at that particular, based on the particular fuel mix at that time. So by doing that, we can convert energy consumption into a normalized, standardized carbon value that that then is assessed for performance. So if you're producing renewable energy with your solar panel and that's displacing, fossil fuel-based thermal generation in the grid, then that is considered as carbon mitigation, and it's converted into a carbon unit. Our platform is unique because it uses the actual real-time information coming from those IoT sensors to provide feedback to the user. So as a business or as a consumer with our gamification app, you get to actually understand how you're using carbon and what behaviors and investments you're making that are reducing it. And that performance is then turned into a carbon product that can be placed in the marketplace. And so what we're doing is we are developing a proprietary supply of decarbonization or carbon-based derivatives that can be placed into the marketplace that the buyer can now feel confident is a standardized, normalized, and measured and delivered unit of carbon removal. This is a very big market. These are the fastest growing markets on Earth. The home solar market, as an example, in the United States is growing from 10 to 70 million rooftops in the next 8 years. The voluntary carbon market is growing from $2 to $250 billion in the next 8 years. So these are double-digit exponential growth markets. And our target is to get to 100 million users in this platform in the next 10 years. The reason why users join our platform is because their performance converted to carbon becomes a very high value product. The reason why our carbon units are very higher quality and value than sort of what's the existing markets is because of the features that I mentioned earlier, the fact that they are measured and delivered on contract. So all of the key aspects that corporate ESG and all of the companies and stakeholders that are trying to make Paris goals achievable by 2030 and 2050, all of these key aspects are met inherently, are embedded within our product. So they are easy to buy, and they're easy to buy not only in a spot market, but also cross-border. We have an app, we're better than everyone else. We have a lot of really good people. We've sold some products. We're doing demos and pilots. We can get to 24 billion in revenue in 10 years from SaaS subscription fees for software, as well as carbon trading. And we're raising 5 million safe note seed round at a 15 million cap to get to 5 million run rate in revenue. And we think we can exceed $1 billion in valuation in 3 years. So that's the crux of it. But yeah, we're developing a new carbon product. So, and we're doing it with measured technology. So I'll be happy to answer your questions now. Let me go back to the Google Meet so I can see you.
Thanks, Philip. I think I can go first. I think it's interesting how you're taking your carbon product. It seems like your carbon product is kind of like the reverse of the incentive, where the user is incentivized after kind of like the services are being put in to create a carbon credit, and then it's kind of like going the other way around, if I'm kind of getting it correctly. Am I right to say that?
Yeah, so what we're trying to do is we're trying to create an additional revenue stream or cash flow from that decarbonization project or solar panel that is going to incentivize a user to install it. And right now, just as an example, in the United States, there's only a 2% penetration in commercial rooftop solar. So there's 98% of commercial rooftops don't have solar in the United States. And the main reason for that is economics. So if we add an additional revenue stream that is beyond just energy cost savings to the owner of that asset, then that incentivizes them to go ahead and install it and grows the market. And yes, it's the reverse, because it's ongoing over the life cycle of that product, rather than trying to speculate in advance what the production of that asset would bring and then sort of discount it back forward to today's value.
Mm.
Oh,
sorry, go ahead. Yeah.
go ahead.
Okay. Okay, so my quick question is there a limitation to your trading platform as far as location-wise?
No, so we're essentially able to generate product globally. Our first pilots are in India, Turkey, the United States, Mexico, many different countries. We'd like to get into Asia, and the buyer is also international. It's in the United States, Europe, Asia, China, etc. So there's really no global limitation because our unit of carbon that we've developed is standardized globally as a ton of CO2. So it is the same product no matter where the buyer or seller is located.
Philip, can you help me understand your business model a bit more? Like, are you looking to sell IoT system, or are you looking to get, like, say, SaaS subscription revenue, or are you looking to get revenue sharing from, like, sales of those carbon credit? And then I think second question is, who are your target customer, and what's your go-to-market strategy?
Yeah, so the short answer is all three of those. We're starting in the enterprise sector, so going to commercial businesses that need primarily automation of scope 2 and scope 3 carbon accounting. And then we are including the IoT devices as a part of the subscription fee. So they're buying an enterprise software subscription that includes the IoT devices, and then that's essentially producing the inventory that goes into the marketplace. And then once we're in the marketplace, we're charging a transaction fee between the buyer and seller for purchasing that product, or as a service turnkey to the seller, so they really don't have to get involved in that whole transaction process.
It is a very big claim to say that you can generate carbon credits with digital sensors only. So I would say that might be possible with solar. I've been working on that myself, so I can see that. But for most other cases, it will be super challenging. So are you focused on solar, or explain more on how you generate a carbon credit for whatever, biogas, biochar, with sensors only?
Yeah, our go-to-market is the solar industry because it is such a large, expansive, and fastly growing underdeveloped market. So that is definitely the first target. And then from there, we're actually going to move into things like efficiency. So the counterfactual reduction of emissions in buildings, and really anything that's tied to the grid. That could be industrial, commercial, or residential. The transition to the market is to start with business and enterprise, and then eventually scale into residential and consumer markets. So going that way. That alone is already a massive business. We do have the option in the future as using different types of sensors and different types of applications to get into different types of markets with gases and other types of fuel sources and CO2 sources. But really the bottom line is it has to be measurable, and we need to be able to match that against other types of activities that we're mitigating. So in the grid is the easiest one because it's possible to get grid generation data that shows what generators are online at any given point in time that we can use to develop that CO2 value. And that's really the key critical point, is that renewable energy is typically sold as a renewable energy attribute in the sort of carbon credit space. And that doesn't necessarily mean that it's removing carbon from the atmosphere. And a really, case in point in that is here in California, we have a big solar footprint. And there's a lot of times when the grid is 100% solar. So if you're adding solar on top of that, you're basically just adding solar on top of solar. You're not really, mitigating any carbon in the environment. And so we're making sure that happens. And I think ultimately one of the biggest applications for this is subsidizing energy storage in electric vehicles. So as electric vehicles become more two-way into the grid and energy storage becomes lower cost and more distributed, the idea of being able to charge up your battery on solar power and then discharge it into a coal-fired grid or a gas-fired thermal grid, basically mitigates a lot of carbon. So that's the kind of the path.
Okay, thumbs up.
Thank you very much. I appreciate the invite, and I wish you all a great afternoon.
Yeah, thank you, Philip. Don't forget to share your presentation or other details in the fundraising group so people can ask you more questions there. Yeah, great stuff. Really, we like Philip because he's a proven entrepreneur who've been exiting several businesses in the past, made a lot of money to his investors. And he's one of the great guys we've met during the Climate Week in New York. So, you know, hyper active. So yeah. All right.
And I really suggest everybody to go to that event. What Joan Paul said was it was a great event, and you should go there.
Thank you. All right, Shiv, are you here? Next up, we have Shiv from Active Surface. Hey, Shiv. Good to hear you.
Good evening.
All right, whenever you're ready.
Awesome. Let me pull up my screen. All right, I'll jump straight into it. So, hey, nice to meet everyone. I'm Shiv, one of the co-founders of Active Services. We make ultra thin film flexible solar panels for the built environment. The problem in the world that we're trying to address is that as humanity, since the inception of solar to today, we've installed around 1 terawatt, but to achieve our net zero goals, we're gonna need a lot more. And this gap is equivalent to the largest solar farm today, which is multiple gigawatts, being deployed daily for the next 2 decades. That's a lot. Our current solution is mainly at utility scale right now. But this can't be our only solution because it takes up land, disrupts natural habitats, and requires interconnection queues that take forever, especially in the US. We could put it more onto buildings, but the American building market is relatively constrained, especially in C&I. And a big reason for that is high soft costs. It costs roughly $3 a watt in the US to install residential solar and a little bit less to do commercial. But the module is only a small percentage of that. Most of the cost is everything else, from labor, structural, BOS, everything else it takes. So if we want to reduce the cost of solar in the built environment, we need to tackle that 90% and make that more affordable. The big drivers for that are things like weight, because these things are heavy, labor being expensive, and then a rigid form factor limiting where you can put it. And all of that is a function of the technology. Silicon is a ceramic, it's fragile. It wasn't intended for the built environment. It was intended to be left in a thick pane of glass and left in the middle of a field. This is why top researchers at MIT, I'm not one of them, I just know them, have spent a decade developing something that's lightweight, low cost, and flexible that can actually go on any surface. It's over 120 times lighter, has lower structural and labor costs, and these are the costs that matter. This unlocks 2 value props. We can put this where you couldn't put solar before, so you would open up entirely new markets. I'll go over what they are in a little bit. And then you can do this at a lower cost, both from a module level and a system level. When you compare us to a traditional silicon, because we actually make our panels, it's just as efficient, lower weight, a cheaper module, and then a cheaper install cost. This is in the built environment specifically. You may be thinking, Shiv, I've been around the block. I've seen flexible solar before. How come this hasn't already changed the world? Well, prior to a couple of years ago, most of the technology that existed that were fundraising were like they were never destined to succeed. SIGs are the very expensive materials. Organic has very low efficiencies. Amorphous silicon hasn't hit cost floors that are relevant. None of them have won on cost below $1 a watt. So we think the secret to success, there is no silver bullet, but if you can hit a cost that's relevant with a flexible form factor, then you can unlock large swaths of solar opportunities. So this is a big promise I just made. How are we doing it? We're doing it with we have 6 patents that we're licensing from MIT that range from manufacturing, packaging, and materials. I'll dive into each one real quick. So we do something called roll-to-roll manufacturing. This is how newspapers are printed, where you deposit inks onto materials. For us, it's plastics, and we have semiconductors being printed. This is a CapEx efficient process. And I can go over the numbers later, but our pilot facility and our N+1 facility was relatively CapEx light. In terms of our packaging, We have IP on transferable lamination. On the left video, it's printed onto a plastic, and you can transfer it over to things like fabrics. This allows us to prefab materials. If you've heard of Tesla's solar roof, we could do that, but actually make it work. They're having issues. The value here is that because we decoupled what you're printing from the final device, you can withstand harsh environments. There's less risk of delamination, and you can prefab various materials. In terms of materials, we use single junction devices that are simple and scalable. We have record efficiencies that are validated by NREL. There's a chart every year, and MIT has a couple of names on there. But that's at this scale. So at large scale, we've gotten early indicators of it being roughly 18 to 20 in the pilot, and then above 20 in the long term. And then in terms of stability, this is why I think now is the time. We're just getting early indicators via accelerated testing, which are like the things you do before you get IEC standard. There's multiple IEC standards, but of 1,000-hour durability, and this is an early indicator of a 10-year life. So we suspect that this is the right time in terms of the lifetime of perovskites to be scaling this up. So the making this is the hard part that a lot of people way smarter than me are working on. The market part of it is what we spend a lot of energy thinking about, because we got inbound from vehicle OEMs to put it on the roof, and to put in agrivoltaics, to put it in space, or weight is super important, to put on drone or IoT applications. But we wanted to start with the market that can justify gigawatt level manufacturing scale as fast as possible. So we're targeting commercial warehousing. There's a huge market in the US, over 6 billion square feet, over $100 billion. There's a very discrete pain point because they can't put traditional solar on their buildings. It's cheaper, lighter, faster payback period, same power. We've won a lot of competition. We're supported by some accelerators. We have some pre-seed funding. We're looking to close out the round now because we have a lead. We're going to have a pilot at 25 and then commission our own line at 26. Our team is awesome. I come from energy. My co-founder is super smart. In terms of our advisors, real quick, I'll say that this guy has spun out multiple deep tech. This guy is a MIT professor, prolific, runs MIT Nano. This guy is gray-haired manufacturing expert. And then this guy won a Nobel Prize 2 weeks ago. Cool. Thank you.
Thank you. Great presentation. Thank you again for waking early to present to us. This is a space we with Atlas Capital are actually very interested, but there's also a few other VC in the region focusing on the built environment like us, which could really like that. So I have a lot of questions, but I will try my best to, spare some time for the others. So, for the pilot, can you share a little bit more? Right now, I guess you guys are TLR2, technology readiness level 2, planning for a pilot in 2025. What's your ideal pilot looking like? And maybe for corporates that you could chat with here, how could they help you to make that happen?
Yeah, so I posted in the Slack that we were just at the Lee Kuan Yew Global Business Plan Comp a month ago, and we won the Kojima Innovation Award, and then SemCorp gave us their second place award for prize. So anyways, I think there's a lot of opportunities, both via doing early stage kilowatt size pilots, via like Kojima has the Gear in Singapore, if you've heard of it, which is an innovation hub. They want to, Luke and the team there want to help pilot it. But there's also applications on buildings. We're talking to one of the largest, I believe they're a large utility in Thailand, and they have a lot of issues deploying solar on rooftops because they often crack either installing it or they get low quality panels to begin with. So we think that there's an opportunity to deploy something lightweight that's easier to install in these markets as well.
Okay.
Also,
next question.
Sorry, real quick.
Yeah.
This is the form factor. We're TRL4, so it works at this size. The goal is just to scale it up.
Okay, cool. TLR4. Thank you. So last question for me, and then I pass the mic. But so, of course, this is lighter, but the materials required to create those photovoltaic cells might be different. Mm-hmm. So, what about the supply of these materials? And there's a lot of talk, about, okay, there's a new solution, it's amazing, but maybe the commodities are not that accessible, or maybe one country manages all these. So what's the materials exactly, and what's the game in terms of this supply?
Great question. My co-founder spent a lot of time in OPV, where they use a lot of boutique chemicals, and then he pivoted over to perovskites, which are based. Yeah, so there's a lot of commodity materials and metal oxides that you can just find from any large chemical producer.
Okay.
So you can source it locally.
Okay. Yeah, we've seen a couple of these in Europe actually, and all of them were very early stage. So sometimes I just want to jump in 10 years from now and see where it go. But I think someone who can tell you what's the 10 years from now industry in solar will look like is Marty. I'm sure you have a bit of knowledge here. Do you have any questions, guys? Feel free.
Actually, I have a quick question. Where are you going to make this at? Is this going to be initially be made in the U.S. and then you're going to scale it up where?
Yeah, so we're our pilot facility at 50 megawatts a year is going to be in the greater Massachusetts area. And then after that, we're going to see where demand and corporate partnerships pulls us.
And how are you going to compete with the Chinese panels?
The Chinese perovskite panel, the Chinese silicon panels.
All available Chinese panel, because from what our experience is, the Chinese have made it so cheap globally.
Yeah. So I mean, that's predominantly silicon, and I agree. We're not starting with markets where we have a strong overlap. Right now, we're talking to Prologis Ventures yesterday, which is a large real estate investment trust, and they said that they every new building they build has to be able to withstand the weight of solar, but there's a huge swath of their portfolio where that's not true. And if we can target those buildings, then traditional solar has a hurdle or a barrier to adoption that we can take advantage of, because they would have to retrofit it, and that would cost an extra 50 cents dollar per watt, and we can take advantage of that premium. So we're starting with markets where we have an unfair advantage.
So your whole product is TLR4, because if it is, that's a long way from market, and you're already building the factory. What I've learned in my career is that if you don't know for what kind of final product you're building your factory, you're gonna have a lot of trouble later. So
to quickly jump in, we're not building the factory yet. The factory will be commissioned by 26. Right now, we are using open access facilities in the Northeast because UMass Amherst and universities nearby have roll-to-roll machines. We're validating the processes, determining the final stack, getting the operating speeds ready, and then we're going to build the machine after. These machines exist in the world. They're not boutique machines or anything.
You must have a very hard time pitching, because everybody will say like, "Oh yeah, I've heard that. I'm not going to listen to you."
I hear that every time. So it's a lot of education. I think a lot of people have pitched perovskites too early.
I mean, I think that the end results. This is something I think you probably have to like show results. Like I think that's just the only thing that you can do. You show results, then the world is yours. If you don't, then it's gonna be tough.
Yeah, it's in a data room.
Okay, perfect time.
Thank you so much, Chief. Very interesting, and let's continue the chat. I have actually a conglomerate I would like to introduce you. So yeah, let's talk on Slack.
Fantastic. Thank you.
Okay. So next up, we have Nicolas Soder. Are you here, Nicolas?
Yeah. Hi, guys.
Wonderful.
All right. Hi, nice to meet you all. Thank you so much for giving the opportunity to present our company. I will share my screen. Just give me some seconds. Yeah. All right. All right. Here we go. Okay. So you can see my screen?
Yes, we can.
All right, perfect. All right, so I'm from the Y generation, and why I started my company and why we started our startup is because I've always been asked myself, what can I offer for our kids, for the next generation? I mean, am I or are we the Y generation, the first generation, to think that we cannot give a better future to our kids? Like my parents, they could say, yeah, I mean, they had the car, they had the washing machine and everything coming up, like the life was getting easier. And all generation before with industrialization, more work, and so on. So it was easy to say that we can guarantee a better life to our children. But right now, with the global warming, with the CO2 issue, with more people on the planet, we see, that we have a lot of problem, including also access to resources. And I won't take a long time here because everybody understands that here and in this panel, and everybody also understands that the biggest issue is coming from the CO2 emissions as of today. That's not the only issue, but that's the one we want to tackle right now. And so the biggest rise in terms of concern is about the building sector. So the building sector produces a lot of CO2 emissions, not only from the energy that we are using inside of the buildings, but also from the scope 3, so from the build itself, so from the walls and so on and so forth. So the thing is that, I'm coming from the building. I'm coming from the building industry. I come from Switzerland. I live now in Asia for the last 9 years. And I was working with, the best technology that we have done in Europe. In Switzerland, I was developing the first cloud solution for building management systems, smart buildings. And, I've always been working with the smartest people. And whenever you go somewhere and you go inside of the buildings, everybody thinks like the only solution to save energy inside of buildings and making building better is to use renewable energy. And I do agree that this is something which is important. However, we cannot only rely on that because the production of, those things, solar panels or, windmill and stuff like that requires a lot of energy, but also requires some mining. Last week I was invited in Australia to see about the development and how to reduce the energy consumption in the built environment in Australia. And so I asked, there was a very good professor. He was explaining how he can bring Australia to zero energy emissions and zero CO2 emissions. And I asked him if he has already thought to put his plan against plans from other countries and if there's enough resources in the planet. And he said, actually, no, there is not. It's not possible. So the thing is that we need to make building more efficient. And yes, we have very old technology, even from BMS, like building management system, that allows us to reduce energy by up to 30%. But there are lots of barriers on the market. And actually, this is what we want to tackle. If you just see the barriers, like as example, tendering for the lower price, which I can explain very easily. I've been working in the BMS world for so long. And when you have a customer that wants to build a building, he doesn't know what he wants inside of his building. So he will see a design consultant that actually doesn't know all the latest technology. We're speaking about IoT, cloud solution, and so on and so forth. And so they just copy paste a very simple thing, especially here in Asia. Especially, I'm just right now in Thailand working on a project actually. And, but the biggest issue is the main contractor. The main contractor is the guy that selects the product that's going to make a building smart. And actually, those people, they will select the cheapest solution they can find because they're never going to pay the energy bill. So when you had BMS suppliers providing smart buildings and whatsoever, so we were always asked to provide the cheapest solution. This is why actually I decided to Uberize the market. So my point is to go to building users, building owners, and to provide them a zero capex solution where we provide a 2 to 5 years model, rent to own model, where we provide them a full BMS service to make their building smart. So actually smart building services, totally free of charge. We get paid only on the savings that we realize. So the customer doesn't pay anything until we start realizing some energy savings. So we have developed our solution in Singapore. So the platform, the software platform, but we are using any product from several other suppliers. We calculate our fee using several models, but the model that we prefer is we have created a predictive baseline. And so maybe you have heard about this kind of maybe ESCO business, energy saving contracting, EPC. Our system is very different because we are providing BMS as a service. We are not changing any mechanical solution. We are only controlling buildings better to help saving energy and reducing the CO2 emissions. So at the end also of our contract, we continue with purely SaaS solutions. So all the technical product that we have installed remains by the customer, and we still provide our cloud solution to continue analyze everything and continue to improve everything. So we are working actually in Singapore, Australia, Perth, Bangkok, and Manila, and so we are a very good team of people because we come from every type of in this industry. But I don't want to speak much about this. This is not important. What's important is that actually we already have MVP. We already have finished some project. We are saving already 35% of energy in 5 months in project. I'm now working in the project in the Hyatt Regency here in Bangkok, Sukhumvit, where we are actually on the way to save 30% of energy as well. And we have a validated contract with the Marriott Group. And we are now looking at raising funds to be able to scale up, to do all the buildings we have access to from the Marriott Group and to continue our development. All right, I did it very well. I hope this was understandable.
I think we also see some similar solutions as well in the market. What do you see as like key differentiation point between your solution and the existing solution? And what is your go-to market strategy in that sense? Like you still need to compete with those existing players.
Well, actually, so thanks for the question. This is in my presentation, but I had no time to speak about it. The thing is that we are totally different for several reasons. So the first one is that our platform is based on what humans are doing inside of a building. So we are not only focusing on technology. Technology is great, and yes, we have predictive models to improve, AI to improve buildings, but we also analyze what are people doing inside of the buildings. Because at the end of the day, you can have the best technology of the world, but if you have someone at the ground floor of your building keeping the door open, we are speaking about hotel. I was just saying this the whole day. Huge door always open. Then obviously everything is going outside, all the codes going outside. So we are taking care of that. We are also having a social aspect where we analyze what are people doing inside of the building. I was just speaking about hotels because this is what comes into my mind. I'm just here. For the, some people are, you have always this thing to wash your towel inside of your bathroom. And so washing towel is a huge amount of energy usage. So people, they always put, so in the hotel, they put some symbol and they say, yeah, don't keep your towel here. We won't wash it and we save the planet. But they every day take your towel anyway. Why? Because the cleaning lady, that she has friends in the laundry and they are 15 workers. And if she tomorrow stop to take those things, then they will maybe only need 5 workers. So how do you make sure that the cleaning lady will not take those towels? And actually this is based on the social aspect. So we have to find a way to redirect this manpower, these resources, to increase the guest experience, so we will not lose the manpower, but we reduce the energy consumption. And this is one of our key differentiation factors on top of the technology that we are bringing in IoT solution and AI.
Great. Thank you, Nicolas. This is a good one. Any other questions? All right. Thank you so much for presenting. Next up, we have Max from MK Aquatech. So just before we get Max ready to start, I want to say something. When I was in the Climate Week in New York 2 weeks ago, I've heard a lot about biodiversity. It's really the uprising topic right now in the climate tech world. Last year was, CO2, carbon capture, hydrogen. Now it's really biodiversity. And to be honest, there's a lot of bullshit into that space. And so I think one very interesting company we've seen here in Southeast Asia is this one. And we try every month during this call to bring, a bit of companies, maybe 30% from US, 30% from Europe, and then another 30% from Asia. And this one is doing something quite impressive with the amount of money that they've got so far, self-funded. And we've seen comparables of this company in Europe that have raised, $20 million and haven't got that much traction. So yeah, this company is quite an interesting one. Max, whenever you're ready.
Hey, hi, everyone. You can hear me and see my screen, right? Okay, so let's start. Okay, I'm from MK Aquatech. We are making urban aquaculture a reality. So, sorry, my name is Max, and yeah, Max Natapong. I'm the CEO and co-founder. I am a person that loves the ocean, but I also love to have seafood at the same time. Every day we do eat 53 million of kilograms of fish, shrimp, and crabs from industrial fishing. So the problem is the reason, not all of them, not all of seafood consumption that are not harmful. Some of them are harmful. For example, overfishing and the bottom trawling. That's the problem that we are facing now. And the challenge that we come up, that is how will we feed a warming world with sustainable seafood protein? We have to farm them more, right? Yeah. And here is the market. It's market. The global seafood consumption is around 20 billion kilograms with 440 billion USD. Asia is 12 billion kilograms, and Thailand is around 300 million kilograms. This is market, the seafood market. And how can we have to farm more of them to supply seafood to the world? And here is the solution: the urban aquaculture. How do we do this? We make it more locally. We make it hyper local to make the production more locally and cut the money that go through the harmful overfishing. We do it vertically, indoor and land based, which we can control every condition for our aquatic to thrive. We avoid the destruction of marine biomes. And we do farm to pay production with less than 300 kilometers for food cycle. And yes, everything that we do is 100% natural practices. We start with the high value crabs, then fish and other species. The traction that we have done so far, that we have done validation for hypothesis of this for this business. And we choose the one that has the highest value to start with British crabs. We have experienced more than 5,000 crabs for our research and development. And we have created a first pilot factory that can produce 17 tons of crab every year. And this factory is running without any chemicals, no pesticide and no antibiotics. We do fully seawater recycle and treatment with RAS. And yes, we have discussion with many nearby customer, restaurant and food production. And we aiming to avoid transportation that produce carbon footprint after that. We want to making seafood that didn't fight mice. And here is its sustainability. From its traditional wild-caught seafood, from farm bait to plate, right? It's had to come from fishing boat, factory, distribution, and customer. Average trip is more than 5,000 miles. And another one that's the urban aquaculture is from farm to plate. It's farm to the customer directly, which can reduce its distribution from 5,000 miles to an average at 200 miles. And its carbon, that's emission, the white cod is, it can reduce more than 10 times. Our vision is to protecting marine biodiversity and by providing reliable and sustainable seafood land-based production infrastructure from every megacity. And here is the value. We left no one behind. We good to the planet. We good to the animal. We good to the consumer. We good to the social. And also we good to the investor as well. Here is our team. Yeah, and thank you. We are research and co-development with government agency as well. And yes, our advisor are PhD in seawater treatment, seawater biodiversity, and seawater aquatic. And also I have John as an advisor as well. Thank you so much for John to be our advisor. And yes, thank you everyone. And we hope that this urban aquaculture, that it can create the things that called sustainable aquaculture. and secure our seafood security. Thank you.
Wonderful. And this was below 5 minutes, so congratulations.
It's 5 minutes. That's 5 minutes because yeah.
We practiced. All right, good job. Guys, questions?
Yes. Any question?
Bang, come on. This is a
Congratulations.
homegrown company.
Yeah, absolutely. They're very, very fascinating. And like Dcarbon said, there's a lot of money has been going into that. So I'm interested, like, from the perspective, what will all environmentalists and PETA say about animal welfare if you grow your crabs in very small cubes?
Okay, for animal welfare, you thought that it's small, right? But it's enough for them. We provide litters that calculate litters for each of them. Yeah, and one of thing, it's animal welfare is better than in the ocean. They got no predator. Normally, the most challenge of the crab is cannibalization. They eat each other. So to prevent this and improve its farming, put them in the cage or the box or whatever, let them separately. So we make that come true and put them in the box. We can provide them highest nutrition. They can eat whatever that they need. They live in the best condition. Our crab, it's super happy in there. So animal welfare is okay.
This is the key question, and you like it or you don't. To be honest, we eat seafood every week, beef, chicken. I think the question is, do you want to eat insects or do you want to eat aquaculture issued crabs or shrimps? And personally, I've made my choice, so I prefer that. I don't want to eat insects. But yeah, you're gonna harm some animals, of course. This is but this is a big thing. But to me, it's better than insect.
I'm glad you thought about it. It's a good answer. So that's okay, so where are you at? What is the next stage? What is the roadmap?
Okay, our first stage, we gonna full scale the farm first, and then we will see the market that's the crab that we are producing now is enough or not. If not, we will expand it more for more crab, because crab is the lowest seafood that you can get from the ocean in Thailand. In Thailand, we import crab every year. Last year, we import 900 million baht of crabs from Myanmar. Okay, so since the supply is too low, we want to push the supply first, increase the supply. And another in additional, crabs farming has only 5%. Another 95% from the ocean. We want to shift that from the ocean to be for farming. That's the first thing that we do. After that, we will do with other species, which is we are focused. We think that we aiming for fish, which we have now in our farm as well, but as a R&D. We have shrimp, we have many types of fish there, seaweed, algae, we have everything. The key point of to doing aquaculture, if you can control water, you can farm anything. That's the point. Okay.
That's my question is, how are you handling, one breakout and then wipe out all your crabs? Because I've studied chicken farms before, and
Okay.
one disease and it wipes out the whole chicken hen, or the.
Okay. First
building.
of all, for the chicken and the other things that land animal, they get it from the air. For the aquatic, they get from the water, right? So the current farming method that we are doing, that we get the water from the natural, that's not good. You can get disease. But once if you can do indoor and recirculate the water, you have no chance to get the new disease. That's how we control first one. The second one, we make our crab to be strong. I would like to say that disease is everywhere. Virus is everywhere. As our experience, the best way that to do to protect them from the disease or breakout, to make them strong. That's what we do. Yes.
quick
And the
question.
crabs
on
have the same salinity, or I mean, not same, but like, their shells will be the same strength and whatnot as a real, natural one that's delivered to food service.
Okay, the one that you get from the ocean and the one that is in our farm is different, totally different. The species that we pick is the best species. There are 4 types of this crab, okay, but I don't mention that, that's too deep. But there are 4 types of crab. This is called mud crab, right? Okay, we call normally mud crab. There are 4 types of them. 2 of them are gone. You cannot find it anymore in Thailand. Another 2. One of them are normally that you can find in the market. And the one that we are farming is the one that rare and expensive and more delicious and grow faster. Okay. And the second one is the species is different. The second one, the method that we are farming, our crab get nutritious food every day. And our crab not live in the mud, not live in the dirty environment, not live in the pollute seawater. Our crab live in the indoor system. So the meat will totally different. It's not fishy. Our crab is super keen. That's what I can offer.
Okay, John.
Yeah. I was curious to hear Ryan's question since he works in agri-tech, and I'm sure you've seen a lot of stuff. But you have a question, Ryan, or not?
I have a quick question if you can answer it
Sure.
quickly. It's just how you guys are managing kind of like the downstream supply chain after you farm the crabs. I'm not sure if you touched on that bit.
Okay. First of all, we want to do local, right? Our mission is to provide it to be locally grown, right? So we have to talk with the seafood to the restaurant or seafood production first, okay? For the restaurant, we aiming to be the premium restaurant first, right? And after that, if we cannot sell, we cannot find the market. China, we can export to them. This crab in China has high value. The price is around 40 USD for this crab in China. Okay, we can direct sell to them because what we offer to the customer is the stable crab, stable supply as well. Because normally, seafood has seasonal storm or whatever, but this one you don't care about storm or climate or seasonal, so you can provide stable and consistent supply. That's what restaurants are looking for. And another point is they don't need to stock the seafood, since if you want it, you can get it from our farm in few hours. But for the others or for the natural, you have to bring from the ocean, the coastal area to the city. That's how it works. So I think that we can find the market as well. Yeah.
I see. Awesome. Thank you. I think that's all the time we have for questions, right, Chopper?
Yeah. Thank you so much. Okay. I will share these things to the Slack. Okay. You guys can visit and check.
Yeah, maybe we can follow up in hashtag fundraising.
Okay.
Thank you, Max.
Thank you so much.
All right. Next, we have Lawrence from Sustonable.
Hello, nice to meet you.
Hey, Lawrence.
Interesting to
Thank you for joining.
hear all the. Yeah, thanks. Thanks for the invitation. I will share also my screen. Let's see. So, do you see the presentation?
Not yet.
Not yet. Oh, right. Are you seeing it now?
Yeah.
Right.
Awesome.
Thanks. So my name is Laurens van Graafeiland. I'm CEO and founder of Sustonable. So stone surface building materials, they are very heavy and they use a lot of natural stone resources. And after lifetime, it creates an enormous amount of construction and demolition waste. And that will be downcycled. And this creates an enormous carbon footprint. So Sustonable, Uses post-consumer recycled plastic bottles. It's the binder material. We use 100 plastic bottles for every square meter produced. And we use recycled glass as raw materials. And so we have already achieved the content of more than 70% of recycled content materials. And it is thin and lightweight. So it's only 25% of the weight. We reduce natural stone resources by 80%. So in total, we also use much less energy to create our material. And if you can imagine, in the built environment world, there's a lot of materials being produced, and especially surface building materials. So if you look at our materials for making a countertop, you can make a very thick-looking detail countertop by using a V-groove technology, and it's just as strong as traditional stone worktops. It's one of the application areas. So besides the fact that we are the most sustainable stone-like surface material, it's also the easiest to handle. Actually, it's relatively easy to cut and to install and to transport. And as a third very important benefit, it is very affordable. It's one of the cheapest stone-like materials, surface materials available on the market. So there are many applications that you can think of. So we're starting with interior applications like furniture applications, so wall panels. Yeah, wall panels is a big application market. Kitchen countertops, kitchen worktops, but also vanity tops or retail displays. So we have a demonstration factory. It's a medium-scale factory now producing in Turkey, actually. It's ready. So we have invested over the last 10 years or so around 25 million euro in development, R&D work, setting up the demonstration fab. And now we're ready to scale even further to a first scale production line. Now our business model is we focus on project business, where we concentrate on, we sell via distributors, and we concentrate on project owners, on real estate developers, and also, of course, the decision, or let's say the advisors like architects and engineers. And wall panels and kitchen tops, we also sell directly to wall panel companies, kitchen tops integrators, and kitchen top manufacturers. So our organization that we have currently has brought us to the level where we are now. We've done a lot of work on setting up the demonstration, doing all the R&D. But we need to really expand the team, so that's why we want to expand our team, our management team, with the COO, CTO, finally also Chief Business Officer, that can also further build the organization to bring it much further to a global scale. That's why we are looking for investment, looking for 25 to 30 million in total for the next production line, the second production line, which will be the first commercial scale line. We want to set it up in Rotterdam, in the Netherlands. We want to do it in two tranches. First one, 3 to 5 million. We already got a regional investor that's looking to invest 2 million of that. So we're looking to match that, and we use that money to further finalize the commercial traction, to get the first demonstration line more capacity up to speed, and to also get ready for the to buy the production line and commission and install it, which we want to do in 2025. Then after that, we want to expand globally with more production capacity. One of the areas is obviously the US, but also Asia definitely is super interesting, as we already got quite some interest from, for example, Korea, but also from Japan. Please, so if you want to join us on this mission to create the most sustainable building materials and building market, please approach me and talk to me, and I'm looking forward to your questions.
Thank you, Lawrence. This is indeed a very interesting space. We talk a lot about CO2 utilization for cement production, for example. But indeed, recycled materials is a good one as well. All right, judges, any questions?
Okay, my family brings in home decor, and we're like a Home Depot also. in Thailand here. So as far as the material, is it something that will, for countertops, right? Will wine stain this if it's spilled on? Or you compare to Caesar stone?
Definitely. Yeah, so let's say those types. So we resemble quite a lot to engineered stone, like Caesar stone, indeed. Caesar stone is a famous brand, also silestone, and the stain resistance is on par with those types of products, engineered stone, and also the heat resistance. So, and the big advantage, of course, is that by making it, let's say, thinner, the material and the same strength, you can install it, easier. Easier, transport it easier.
And the billion-dollar question would be, is it easy to copy, and why not make it in China before it's actually made in China?
Yeah, so it's a unique technology, continuous process. It's the extrusion process, which we developed over the last 10 years, and we patented it, so it's proprietary, and also you got a lot of know-how on formulations, on all the process conditions, and there's a lot of let's say details that are super important to get it working. We've learned a lot of lessons, and so finally, I believe that we can protect it quite well. But maybe after putting in $1 billion or billions of dollars and a lot of years, you can copy everything finally. Yes, but I believe we can really protect it very well.
But wouldn't you want to cut your costs and make it in China anyway?
Well, that's an option if we have a good partner there, but you need the raw materials and you need to market, and it's an option. I believe maybe in Asia there are more interesting countries to be in than China, and sell it. Then you can sell it to China, obviously. That's a big market for engineered stone and solid surface materials, definitely.
This is a recurring question that Marty have brought up, but really to all the Chrometzka founders, I'm also asking the same question very often, because sometimes there's so much money spent on R&D, and you have this incredible Duolingo or whatever IP, but you might just get screwed because So it's really something to think about for any climate innovations that have IP. So yeah, I hope you guys will be finding a partner in Asia, China or not. Yeah. All right. Other questions?
Have you guys done a complete life cycle analysis of the material to be claiming that it's sustainable? And if so, I guess what's the key points in the report?
Yeah. So we have a life cycle analysis. We have an environmental product declaration for our first product, basically, which is it's around 1/3 of the carbon footprint of the average of the traditional stone materials. So we save a lot there.
Roland, and what's your thinking around securing the feedstock? Like, how do you make sure that you have like consistent supplies of plastic?
Yeah. So the recycled PET business is quite mature, I would say. So we're using flakes, PET flakes. We're using the non-bottle grade, so that's a good thing about us. We can handle quite some contaminations if you compare it to bottle recycling, for example. And so we also don't need the food grade bottle PET, so that is also a big advantage. And these PET recyclers can supply quite a regular quality of feedstock to us.
And Lawrence, I mean no offense by asking you those questions. It's just we used to actually import Italian tile, Italian marble, and then now we make it in China because they copy it so well.
Yeah.
And it's so much cheaper. And you should have a lot of plastic in China with the bazillion people that live there.
Yeah. If you look, of course, in the ceramics production and engineered stone, it's quite, let's say, proven technology. It's similar. There are not many different types of technologies. There are like 1 or 2 systems that you can make, and those are Italian-based or copied in China or India. So we have a unique kind of extrusion technology, which is not anywhere yet. Yeah, we'd like to keep it around as long as possible and protect it as good as possible. Yeah.
Okay.
Thank you
Good.
so much, Lawrence.
Yeah.
This is also in the built environment space, so we look at that quite deeply for our next fund. So yeah, let's have a chat separately.
Yeah, right. Thanks for the opportunity.
All right. So next up, Guillaume, are you here from Cleartoo?
Yep, right here.
All right. So we are heading to the last 3 startups. We're gonna try to go a little bit faster to make it in time, but they are also some of the most interesting. So stay here, and whenever you're ready, Guillaume.
Thanks. Let me just share my screen over here. Okay, can everybody see my screen? Perfect. So yeah, I'm the founder of Cleartoo. So basically, the idea of Cleartoo comes from a couple of years ago. I had this problem, I'm sure you all had here. My girlfriend would get ready and she would stare at her closet door, completely bursting with clothes. And every single time she would look me dead in the eye and she'll tell me these 5 magic words. I have nothing to wear tonight. And behind these words hide a very deep truth. It's the truth that as of today, women globally only wear 20% of their clothes, leaving 80% to take the dust and at the worst case, end up in landfills. That's why globally, it's over 90 million tons of perfectly valid clothes that are ending up in landfill globally. The problem with the Southeast Asian and Thai market, to be more specific, is the access to the second-hand market is relatively difficult and unsafe. Happening on Facebook Marketplace or Instagram pages, you're just transferring money to a random person, and you're just going to pray that you get a parcel in return. So that's why it's estimated that there's over $1 billion baht in yearly damages from online scams. That's where Cleartoo comes in. We are a triple win solution. We help households all across Thailand easily and safely make money simply by cleaning out their closets. We help consumers save up to 80% compared to retail price on their fashion shopping. And of course, we are a sustainable alternative to fashion, as buying 1 second-hand shirt can help save up to 6 kilograms of CO2. As of today, Cleartoo, we're here to redefine and to redesign the whole second-hand fashion experience in Thailand. So the business model we decided to use is a business model that's been proven worldwide. It's a commission-based model, so we take 7% on each transaction, and we also offer a variety of paid services. For example, boost items, like that we can help you promote your shop and attract even more buyers. So the market, of course, it's a $1 billion market. The fashion industry in Southeast Asia is valued at over $50 billion. If we remember the 80% of clothes just taking the dust in our wardrobe, that's $15 billion worth of clothes we don't wear and are just waiting to be loved again. Our target by 2029 is to relove over $600 million worth of clothes thanks to Cleartoo. So where are we today? Well, today we're extremely proud to announce we have over 350,000 registered users on our platform. And most of this marketing is through simply word of mouth, which enable us to have one of the lowest customer acquisition costs in all of Southeast Asia, standing at $0.02 per download. We're also very proud to have helped save over 160,000 kilograms of CO2. That represents over 40,000 clothes traded since we launched 2 years ago. So the amazing team that helped us bring Cleartoo today was Vika Sharma, my CTO. Previously to Cleartoo, he developed a ride-hailing app with over 500,000 monthly active users, to Kuning and Kungift in content creation and community management. But we also have a very vast network of advisory with experts in their industry, from Marie Fournier, General Manager Emmanuel Ungaru, luxury fashion brand in France with factories all across Thailand, to Alice Delamotte for digital analytics consulting, and with local very successful founders helping us all along our road. Right now, we're targeting the 250K round. We're roughly already 50% committed through business angels. We're raising through a safe note with a 2 million valuation cap and a 15% discount rate. The goal of this round is to be able to bring us to a pre-Series A level that's over 1.8 million registered users, generate over $2 million in GMV, and target $500,000 in revenue. Thank you very much.
Hi, thank you for the presentation. We actually do see many similar players, especially like super early stage one, popping up this year in exact same sector. What's your strategy to actually, at the end of the day, acquire like the largest portion of market share, or convince customers to actually use your platform rather than the other platform?
Good question.
Exactly. Well, very good. So as of today, we are the largest platform in all of Thailand. We are the only one that can bring such a big reach. Most of the companies in Thailand use a consignment model. So we don't see them necessarily as competitors, but as potential business partners to be able to grow with them, to enable them to access our traffic. We do have one direct competition who just launched their app a couple months ago. So where do we, as of today, we just are a lot more technologically developed, and we are one of the sole, we also have integrated a personal e-wallet, enabling our customers to keep the money within the application, and whenever you sell an item, you get paid in your wallet, and then you can use that money to shop other products or to get those paid services at a discounted price. So this is where we are today, and we're also looking in the next 6 months to integrate sustainable brands to enable them to sell also on our platform.
Do you foresee moving on to other industries other than just secondhand clothes? Because I know I'm based in Singapore, so carousel is a big thing here. It's basically our version of what's that in America? Either way, it's basically for us to kind of sell secondhand clothes. They started out as clothes as well, and then now they're selling cars, selling things like that. What's kind of like your projected growth for you guys in the future?
Exactly. So right now we're also looking to expand more into the B2C model, working directly with all the consignment stores. We currently have some letter of intent from 2 stores to be able to join our platform, and we're also looking at all sustainable fashion and sustainable products to offer them larger visibility to all of Thailand.
I see. And are you keeping all your transactions through the e-wallet, or do all consumers have an option to kind of transact outside?
They have option to transact outside. The idea is as we grow, we're going to strengthen the technology to be able to ensure all the transactions remain inside. So this is as we grow, the part of the funding will be to develop features to ensure everything stays in.
And what is your, do you guys have like a default rate or like a complaint percentage for like the number of consumers who basically fall off the app due to, you know, your churn rate for consumers who are unsatisfied?
Sorry, can you repeat? I didn't hear well.
Do you guys keep track of, you know, like consumers who have reported unsatisfactory transactions on the view on your app?
Yeah. We collect everything. So as of today, we already launched our data mining strategy. So we actually mine over 200 data points per customer, which enables us to have a surgical precision in every feature we develop to have the best impact possible.
Gotcha.
All right. Thank you so much, Guillaume. Interesting business indeed. You know, please share on the fundraising channel so we can have more questions going on with the judges and the other investors in this call and on the call moving forward as well. Next up, we have Luis from Yindii.
Hello, everyone. A pleasure to see you. I know it's the end of the day, so let's do it quickly. Let's talk about food. I don't know if you guys are hungry.
Indeed.
Indeed, yes. All right. So I'm not going to talk about the food that we eat. I'm going to actually talk about the food that we don't eat. I discovered few numbers 3 years ago, starting with this number, 1 billion ton of food. This is what we waste at a global level. This is really massive. This is 1/3 of everything we produce. And this is impacting at 3 levels our current society. The first one is the food businesses that are losing up to 14% of their revenue daily because of food waste. Second one is consumer, because food waste is driving our food pricing high, hitting records today. And third, it's impacting our planet, contributing to 10% of our greenhouse gas emission. Just to give you a comparison point, that's 4 times what the airline industry pollutes. So when I saw those numbers, I thought to myself, there must be a solution to reduce wastage. And I decided to create Yindii. Yindii is a food surplus platform. So we connect food businesses that have high quality unsold food, supermarket, hotels, restaurants, bakery, and we connect them to consumer online at really, really attractive pricing. It's a win-win-win model. It's a way for businesses to make revenue instead of making losses. It's a way for consumer to get access to quality food at a fraction of the price. And it's a way to reduce our food waste and its climate impact, 1 meal at a time. How does it work? Very simple. It's a double-sided marketplace. On one side, we have the customer. On the other side, we have the merchant. Consumer can save food, save money, and save the planet. You just download the app, check amazing restaurants and deal in your area. You can go and pick it up at a specific happy hour, and you can collect a surprise bag made of the unsold inventory of the day. Think about delicious croissant, a buffet from a hotel, or a massive grocery bag from your local supermarket. And on the other side, for the merchant, it's also win. It's a way to increase profitability and drive new revenues. Win new customer that will discover your brand, discover your product, and a way to reach your ESG target and improve your sustainable branding. So Yindii has been able to onboard almost 1,000 merchants from hotel industry, Accor, Marriott, restaurants like Pret a Manger or S&P, bakery chains like Maxim in Hong Kong, or supermarket like Tops from Gourmet Market in Thailand. Our customers love us because it's actually an awesome way to get access to food. They call it happiness in the box. And when it comes to merchant, Gourmet is actually reducing by 70% their food waste in the fruit section and vegetables. Pret a Manger make $500,000 Hong Kong dollar in 6 months by rescuing over 10,000 meals through our community. So really, really strong impact and very simple business model. We take a commission of every box that we sell through our platform. So it's a $1.3 trillion worldwide market, 140 billion for Southeast Asia, focusing on retail and food service. That's $5 billion of unsold food that we could re-commerce through our platforms. And our target is to reach $300 million of surplus food saved through Yindii within 5 years. We have an awesome team to do that. Maima has more than 9 years of experience in B2C company from Lazada, Itigo, handling customer loyalty and retention over 8 countries in the region. I personally helped 2 Series A tech startups expand from Europe, US, and Southeast Asia. We have Chin from our CTO from Google. We have our head of Hong Kong that used to be at Deliveroo. And we've already won some awesome recognition, most recently App of the Day and most impactful tech company in Hong Kong. We've reached so far 200,000 users downloading our application. 75 of it comes for free or through word of mouth. Our major channel now of acquisition is influencer marketing. So we have a CAC at around $3. And 1 out of 2 new customers repurchase 4 times within 30 days. We're proud of having saved almost 400 tons of CO2, and we just tripled our revenue in the last 4 months. We're closing a $1 million round through SafeNote. 70% is already closed, led by SOSV, the most, what's their nickname? The most active early stage investor on climate tech and food tech. Synchro Food, a public traded company in Japan. Maison Denis, which is a food and manufacturer, it's a worldwide company, but implemented also in Southeast Asia, and few local VCs and family offices. Our goal is to reach 100,000 monthly revenue by mid of next year, to potentially do a Series A. And looking at the exceptional success of the expansion of Hong Kong in March, we're also looking at expanding into an additional country in the region early next year. Thank you very much.
Great pitch, Luis, and I am really impressed now because we've had the chance to touch base, a year or two ago, and you've been executing step by step. Now pulling SOSV, which is one of the largest early stage investors. So good job, man. All right. So any questions, guys?
Yeah, I have two questions. First is regarding what kind of qualifies the food to be classified to be sold on your app as like saving the food? Like, is it when it's approaching kind of the expiry date? Second question is how do you guys protect yourself against those super apps in Southeast Asia where they come in and offer a service similar to this when they already have onboarded quite a few F&B outlets as well? So those are my two questions.
Okay, so the first question is on the supply. So basically, today we help hotels, supermarkets, and restaurants. So when it comes to hotel and restaurant, they are very dedicated time. The problem is the cutoff time when they close the shop or where the buffet is closing. So the food is exceptional, is high quality, but it's just that it needs to be consumed within the next hours or within the same day. So we sell it during the same opening hours that you would go there and buy at full price. We sell it at 50%, usually the last few hours of service. So this is the same quality you would find in the shop for their own customers. And when it comes to supermarket, I mean, there's rules and law. You cannot sell expired food. So yeah, they have to sell edible food still on the I would say on the not past the past by date. Second point was how do we cover ourselves against major food delivery player? The first point is there are some food delivery player that already tried to copy us. Early this year, Lineman decided to launch their green box project. The only problem is when you're on Lineman as a brand, it's a discounting app, right? It's a food delivery app, and it's a lot about discount. So basically, you're selling in the same space your full price items and your discounting items. And so it's cannibalizing your own sales. And you prefer on those platforms to sell your full price items. And the second thing is there's no sustainability branding that goes with those delivery platforms. So if you're a major group and you want to have sustainability, you want to be linked to a brand that drives sustainability. And I'm sorry, but those food delivery players are not the sustainable players. So I think that's one of the major reasons to do that for those brands is to get visibility, to demonstrate and their commitment on their ESG, and that's very important. When you look at the business model of Yindii and you're a brand, you're really covering your food cost and maybe packaging, but you're not making profit. So those food delivery players are helping on the top line. Yindii is really there to help reduce their losses and help the bottom line.
Got it. Good answer. Thank you.
Lineman, they stopped the project, and now they're discussing with us to see if we could potentially build a Yindii section within their application with our own branding. So that's also telling you that there's more, I would say, synergies and potentially also purchasing of the company in the future by those players rather than them trying to bring it from scratch.
And how do you deal with food poisoning?
So basically, the responsibility is on the shop side. So when you choose on Yindii, you don't order Yindii food. You order from the Athénée Hotel, you order from top supermarket. So it's their responsibility when it comes to the food. The way we protect our users is they have the right to refuse the food if they think it's unsafe, and they get 100% refunded as soon as they receive the box. That's the first point. And the second point is liability. Also, once you receive the food, the liability is on the customer, right? You have to eat the food. on the spot. You're not supposed to call back 24 hours later and say, well, actually, I'm not happy with the food, right? It's really at the same point. You need to check the quality. You can have 100% refund, or then you accept the liability and you eat the food. So we receive quality question for about one in out of 10,000 orders, and usually it's more of a delivery issue when the bag is you have cakes arriving at your home and it's destroyed because the delivery didn't pay attention.
Marty, Pang, any questions? We're good?
We know each other already.
All right, awesome. Thomas?
No, just a great pitch. Like Djoann said, congratulations. Really good product, well described, very compelling. Love to talk more later.
Yeah, I will be installing your app.
You didn't do it, Djoann? Oh my God.
I will be installing it now. And Marty and Peng as well. I can see it in their eyes. All right, thank you, Luis. Next up, and the last one, we have Ankit from Sheru. Are you here, Ankit? All right, so if Ankit isn't there, then we're good. We're perfectly on time. 6 p.m. almost sharp. Good stuff. Thank you so much, Pang, Marty, Thomas, Ryan. We really appreciate you sacrificing a little bit of your time for early stage companies. Last time we had too many late stage, early, Series A, Series B companies. So this time we try to get a little bit more on the pre-seed or seed, a little bit more of software as well, because we've heard that we were doing too much hard tech. So this is really much the first time we get that many software. Please give us feedbacks. We will be running this event every month. We want more partners. We want more VC funds to partner with us for these events that our team is putting together. Feel free to share your deal flow that might not be interesting for your own fund, but that could benefit some visibility to other funds in the coalition. And please talk to everybody about the Southeast Asia Climate Tech Coalition. This is the gang that we're creating all together. This is not something that we own with Atlas. We really want it to be a white label that other funds are using. So yeah, spread the message. Thank you for the startups joining. You guys are amazing. You guys are shaping the future, a greener, more enjoyable future. So yeah, keep doing it, keep rocking. And if we can be of any help, all of us will be on Slack. We can make a couple of intros. We can help you guys out. So this is just the beginning. Okay, leverage this Slack group, guys. This is how you can really make the most of today's call. Thank you, and I will see you very soon online. Bye-bye.
Thank you. Bye.
Thanks, John. Bye, everyone.
Yeah, what do you have?